Hi there, I'm Christian Reither of Curreen Capital, and today I wanted to talk about watering the flowers and cutting the weeds. This is a portfolio management framework or tool that will help you manage your portfolio of stocks more effectively, think more clearly, and hopefully get better results in the end. Because that's what we're looking for, right? Now, I've written about this a few times in my investor letters, but I wanted to talk about it a little bit more here in this video. So, Peter Lynch is the one who came up with this idea of watering the flowers and cutting the weeds. At least he popularized it. Warren Buffett then endorsed it in his famous 1988 letter to shareholders. Right after he says that his favorite holding period is forever, the paragraph after that talks about watering the flowers and cutting the weeds, where he basically says his favorite holding period is forever if he has a flower. And if he has a weed, he wants to cut that pretty quickly, and you can see that Buffett cuts weeds pretty quickly. Now, what is a flower and what is a weed? Before we get too much into this, a flower is a business that you buy the stock and you have good hopes for this thing because that's why you bought it. And then information comes out. You get earnings releases, you get press releases, you get big things happening in the world. And when these things happen, it's either good or bad for your business. So when operating performance comes in better than you expected and things in the world happen that are better than you expected, you have a flower. When operating results come in and they disappoint you, you read this earnings release and you're like, this isn't what I signed up for. Like, this isn't the turnaround that I expected. This isn't like the rising earnings. This is like somebody's stumbling here. This is not what I wanted. Then you have a weed. So it's based on operating performance being better or worse or disappointing versus your expectations when you bought the stock or your expectations before you got that information. And what you do is you want to water your flowers. So you don't sell a flower, you hold on to the flower, and you should add to that flower and buy more stock. With a weed, you have a disappointment, like an operating performance is disappointing. You don't add to this just because it got cheaper. You don't necessarily hold on to it. You probably want to cut it. You want to sell some or all of that weed. That's the basics. Now, this sounds similar to the trading maxim, which is cut your losses and let your winners run. And they both have a lot of similarities, and I'll get back to that later. But this is based on operating performance, not on stock price performance, because they're going to have plenty of times in your life where they go together, but there are going to be exceptions where they do not go together. And in those cases, you don't follow the stock price performance, you water your flowers, and you cut the weeds based on their operating performance. So, in practice, there are 4 ways you can have a weed or a flower. So you can have a flower and the stock price goes up, you can have a flower and the stock price goes down, you can have a weed and the stock price goes up, and you can have a weed when the stock price goes down. Those are sort of the universe of things that can happen. So let's say you've got a flower and the stock price goes up. So good information has come out. You read this earnings release or this big press release that has come through, and you're like, wow, this is great. You know, like if you're me, you're patting yourself on the back of like, wow, I did a great thing. I bought that stock, and now things are really, really rocking. Stock price is up 10-15%. You're feeling good. Water the flowers and cut the weeds tells you stop feeling good about this and add more money. You want to put more money into this. You certainly don't want to sell it. At minimum, you want to hold it, but you should probably be watering that flower and adding more money. And in that case, you are going with the trader's maximum, at least letting your winners run. You're not selling it just because the price went up. Second scenario, you read this earnings release and you're like, this is actually really good. Like, my thesis is playing out really well, and it's actually a little bit better than I thought. Like, management's doing some stuff. I'm really happy about this. Then you look at the stock price, and it's down. It's like down 5% or something like that. Maybe something happened in the world. Who knows? But you're like, this is great news. Like, I've got a flower, and I've also got a loser. You don't follow the trading maximum. You don't cut your losses. You want to add more money to this stock, despite the fact that the stock price is down, because you see that you've got a flower. Third scenario, you've got a weed. You read the earnings release, you're like, numbers look good, but like under the hood, I really don't like what's happening. Like, I think that the basis of this business is X, Y, Z, and this is impairing X, Y, or Z. Like, I don't like this. The stock market pushes the stock price up. Here, the trading maximum would say, let your winners run, and our water the flowers, cut the weeds says, this is a weed, cut it. And you cut it, even though like maybe you have short-term gains on this. You cut it because you are operating results that you understand with your thesis. Something is wrong. You need to get out. You won't feel good later. You won't be able to hold on to this if bad things happen. You should get out now, and I think that it'll work out well for you, even though the stock price is up. Fourth scenario, you've got a weed. You bought this stock, you were optimistic things were going to get better, or like, things were working, but now things are sort of hit a bump in the road, and you're like, this is not good news. Like this is a weed. The stock price, you look at it, it's down 10, 15, 20%, and you're like, now I've got this loser. This is a disappointment to me. I thought this was going to work much better. I had like high hopes for this stock, and now, maybe it had been doing well, and now something is not going as well as hoped. What do I do? Like, now it's so cheap. Like, how can I sell it here? You cut your weed. Like, this is what I mean when I say that this is a way to clarify your thinking. Thousands of things. You're thinking about taxes, you're thinking about the other things going on in the portfolio, you're thinking about the rest of your life. Like, and then you've got this stock, and like this thing happened to it. All you have to do is identify, is this a flower? Is this better than I expected? Or is this a weed? Is this disappointing me? Is this worse than I expected? Is this business not performing as well as I had hoped? If you can tell if it's a flower or if it's a weed, you know how to act. You water your flower, you hold it or you cut it, you hold it or you add to it, and you cut your weeds. Like, you certainly don't add more money just because it's cheaper. In fact, you probably want to be selling it. So overall, this framework is quick in terms of cutting through things, of saying flower or weed. You know what to do. And I think it also helps you to be more in alignment with what the stock market wants. I think that the stock market rewards patience with success, and it punishes patience with disappointment. So it will reward ruthlessness with disappointment and patience with success, and you want to be more aligned with that. And this will nudge you towards holding on to the businesses that are doing well, and it will nudge you towards selling the businesses that are not doing well, even though the price is down and even though it's painful emotionally to sell them. So this should help to clarify your thinking, because you know what to do quickly, despite all the thousands of things that you think about with a stock, and it'll put you more in alignment. And that is where it is sort of the overlap is with the trading maxim of let your winners run and cut your losses. Like, that also pushes you to be, patient with success and ruthless with disappointment. But I think that watering the flowers and cutting the weeds is even better, because it's based on operating performance, which is ultimately what matters. Now, is there an exception to this? Is it perfect? No. So it's not perfect, and there are exceptions, but I still think that following this will improve your results, clarify your thinking. So the exceptions are, like, at a certain point, at a certain price, you have a flower and you should sell it because the price is so high. And at a certain price, a weed is so cheap that you should buy it, and you will make money if you buy it. Between those two extremes, you've got a lot of room, and like 99% of your time will be spent in that area where you should be watering your flowers and cutting your weeds. But there are exceptions, and I want to talk about them and not just ignore them. So with a stock price that is so high, you've probably held on to it into nosebleed territory, well beyond nosebleed territory, and now it's in super nosebleed territory. And the longer you've held it, you've had your diamond hands and you've made more and more money, but at a certain time you should sell it, and it's very, very hard to know when to sell it. You won't get it right. Like, first off, you have to know that you won't get it right. You won't sell at the top. What is useful is you have to have some sort of valuation metric that you can use to say, this is really, really crazy. I can't get there with this stock. I have to sell it now. Even though it's a flower, even though it's a great business with great management, long runway, and I love everything, I still have to sell it. And another thing that can be helpful there is, you've got your valuation, but you can also say, I've got this other flower that I also really like that has this stuff, but it's not so crazy priced. Try to sell the super flower, super expensive flower to buy that other flower. Again, it's very hard to sell those super great businesses that have rewarded you so well over so long, but you need to at extremes. Extremes for the downside, where you've got super cheap stocks, like a weed that has just been a disappointment for everybody, but now the price is super low. I have seen for myself that I can buy those if I have my upside, my reasonable value, my downside value. If I can get a 15% IRR to that downside value over 2 or 3 years, which works out to be like 2/3 or 60% of my downside value, which people used to talk about as like a 33 to 40% margin of safety. Nobody talks about that anymore because value has sucked for so long. But if you get that 15% IRR over 2-3 years, or 2/3 of downside value, Buying then has worked out for me even when I have a weed, but that is the exception. That has only tended to happen when I have a stock that I'm looking at that is particularly punished in a down market. So I saw stuff like that in March of 2020, but I don't see it like today or most days. But at market downturns, you may find that you have a weed that becomes so cheap that it's worth buying, and those tend to work out just because they're too cheap, and you get some reversion to mean on operating performance there too. But those are the two exceptions. Super high priced flowers should be sold, and super low priced weeds should be bought. Anywhere in between, water your flowers, cut your weeds will serve you very well. Might not be perfect. My experience is that stock price pops on a flower, I buy it, and then I feel like a sucker for 2 weeks because I remember the times, I forget the times where the stock price keeps going up, but I remember the times where the stock price drifts down, and I feel like a sucker for buying too quickly, for being too impatient, and not waiting for the market to recover a little bit. And the same thing, I've sold weeds when the stock price goes down, and then the stock price bounces off that, and of course I remember that, and it sticks with me. But in general, a few months later, I look back and I'm very happy with my decisions, even if they hurt you in the short term. So follow this. It's a quick way to clarify your thinking, to know what to do. It won't work perfectly. You won't nail the bottoms or the tops. But over time, this should improve your results. It certainly has improved mine and clarified my thinking, which is why I wanted to share it with you, and I hope that it is helpful for you. So good luck. Water your flowers. Cut your weeds, and good luck out there. Thank you very much. Goodbye.